Please Play is brought to you by Fraser Milner Casgrass.
Hello and welcome to Squeeze Play. Today we start our real estate special, What Does $300,000 Buy Me? But a word of warning, if you think this is about flipping properties, you can flip the channel right now. This is about value investing for the long term. We're going to cross the country and take a look at what kind of a cash flow you can generate with an investment property in cities from Hamilton to Edmonton. Our guide on this trip is Don Campbell. He's president of the Real Estate Investment Network and author of Real Estate Investing in Canada. Don, we're really excited about it. Looking forward to this.
This is going to be great.
Okay, so tell me, of course, you're the antithesis, really, in many ways of what we think of when we think of investing in real estate, because we think about the quick buck. But you're looking at kind of long-term fundamentals here. Give us a sense of what some of the criteria, key criteria that you look at when you're looking at valuing a jurisdiction.
Sure. Well, what I'm trying to do is define the difference between speculation and investing. Speculation is buying in a city that the only way you make money is if the value goes up. That's it. And you see a lot of the late night TV, all that kind of stuff. It's a time to buy and flip and take advantage of the seller. My job is to be, as you said, the opposite of that, and that's to find the economic fundamentals, the underpinning of the real estate market. I always say that if you're trying to project the real estate market based on housing numbers, it's like driving across Canada staring at your rearview mirror. You are going to crash. Housing numbers are in the past. Economics allow us to look forward the next 5 years.
Now, Don, today we're going to profile Surrey, British Columbia. Why do you think that there are some economic fundamentals there that would put that location on the radar screen of a value investor in the real estate space?
Well, the first thing the value investor is looking for really is some economic growth, some underpinnings of that market. So we're seeing population growth, we're seeing job growth, we're seeing low business taxes, which is attracting more people into the world. And we're also seeing the LRT, the light rapid transit from downtown Vancouver goes right out into Surrey, so therefore makes it accessible. But if you take a look at how we look at it, the long-term formula, real estate markets have to start with GDP growth and job growth and in-migration, and the city of Surrey is getting all of those.
Okay, but correct me if I'm wrong. Surrey's also known for having a pretty high crime rate.
Yes, Surrey went through its stage, did they not? And but you've got to understand that Surrey, like Toronto, is a large geographic area, and you do pick your neighborhoods very, very carefully. And yes, and the nice thing is that they're getting the whole new RCMP headquarters right into Surrey. 2,700 new policemen going to be sitting right in the middle. Yes,
with tasers. Watch out.
No tasers allowed. No tasers.
But look, you say also the political environment matters. The government, especially at the municipal level, this is important. Investors should be, kicking the tires of the local government.
And that's really important is that if you're going to invest in a city, get into the office, talk to the economic development office, talk to the mayor and council, talk to the under guys who are making the decisions on the zoning. Mayor Watts of the city of Surrey, Diane Watts, is now rated the 4th best mayor in the world. Now that's a pretty good position to be in.
That's based on?
And it's based on whatever the criterion is that they set them. Usually it's going to be set by leadership and the economic drivers in our city. And so she's come out with some very, very good policy.
Okay, well, talking about the mayor, let's go to her right now and hear her comments.
Well, there's a number of indicators that are very important when investors are looking into the city. It has to do with a stable environment, a stable government for sure, a proactive government that really creates that climate, making sure that you have growth, that there are jobs that are available, that there's a quality of life that's really good for family living, and especially when people want to come and relocate or open a business in Surrey, certainly their workforce needs to be close to work. So all of those aspects come together and play a significant role in investment in the city.
So Don, you've taken a look at a few properties in Surrey, starting off with a duplex property. Give us we're going to put it out on tape right now and we're going to get a look at it. Sure. Explain to us why this is possibly an attractive property for someone.
Well, I looked at all over the city, as we'll do in all the cities. This one here is a duplex. It's a duplex. The right-hand side of the duplex has a suite upstairs and a suite downstairs. So I'm looking for yield. I'm looking for positive cash flow. It's got a large yard, so it attracts families. It's in relatively good shape for its location, which is always good because it saves you on any renovations. And it has, the things that are attractive to it are the region, close to transportation, and also there's the upstairs, and now you see downstairs is the suite for the secondary suite, which is large and bright, and that's what we're looking for, something that's very rentable. In that whole duplex, we've got one tenant who's been there 7 years and another who's been there for 4 years, so you know that it's a good place to live for the demographic you're trying to attract.
Well, Don, run us through the numbers on a property like this and why you think a value investor should be kicking the tires at a home such as this.
Sure, there's a lot of due diligence and that you need to do behind the scenes, but let's look at just the numbers. What I've decided to do is go across the country with $300,000 in my pocket and see what we could buy. And in this case, this duplex goes for $320,000. And within that, as we walk around, as an investor, you could get into it for $64,000.
As a down payment?
As a down payment.
Okay.
A homeowner could get it in there for $16,000, which is kind of nice because they could live upstairs, rent out the basement, and live almost for free.
Don, let me just stop you there. Why the difference between the homeowner price and the investor price?
Great question. Right now, the best mortgage you can get for an investor is 20% down, and as a homeowner, you can get in for 5% down, even though it has a suite. So it's a good starter home for a young couple who wants to get into the market out of the rental market. So we looked at the mortgage rates between 3 and 3.75. You can get them for less than that, but I want to be conservative throughout this. And I think we have a board that kind of walks us through the numbers. That the rent for the suite upstairs is $1,200, downstairs it's $725, so that's $1,925. We're in, we take the mortgage off, which is $1,000 roughly. The taxes are $202 a month. We're left with $648 a month positive cash flow yield. Times that by 12, we got $7,776 positive cash flow. We're in for $64,000 down. That's a 12% yield. That's a 12% yield on your money.
So potentially better than the stock market.
Well, consistently it has been for me.
Yes.
Yeah, absolutely. Because not only that, I'm not talking about value increase, and I'm not talking about the mortgage pay down. Every single month, that tenant is paying your mortgage down, which would add to your yield. I just wanted to talk about it from that direction, from a stock investor or a mutual fund investor's look at it. Long-term tenants, mortgage goes down, your yield goes up.
But Don, unlike a stock, I wouldn't want to flip this house and try to sell it a year later because I've got some serious in and out costs, land transfer tax in many municipalities, broker costs. Explain that piece of this puzzle.
Absolutely. That's something that we really want to stress here. We are talking investing, not speculating. And investing, you have to have at least a 5-year window when you're getting in. That's why you have to be particularly picky around the area that you're buying. And that's why we do these economic fundamentals. We release reports called Top Investment Cities in the Country so that people can pick an area and then buy in the right neighborhoods so they can hold on for 5 years and make sure that it does what it's supposed to do. 12% yield, I'm happy with, and I know for a fact that region will go up 3 to 5%.
Now, there's an alternative, though. If you don't want to buy a duplex, you can go in for 2-for-1.
It's a 2-for-1 deal, and the numbers are really interesting. This next property we have the video on is a walk-up townhouse condo, and that's the exterior. It's the white one there. Sells for $160,000. So that means the first one was $320. This one's $160. You can get 2 of these for the same price. Down payment, let's just talk investor, $32,000 down. Same idea. Here's the deal. The rents are $1,050 for these right now. That's probably a little low, but I like to be conservative. The mortgage is $539. The taxes and strata are combined to be $278 a month. Even this property, and see, it's in pretty good shape. It's got some, you may or may not want to live there, but it's a pretty good spot in which to invest because it's going to provide you $233 a month net revenue after all your expenses, and that's $2,800 income with $32,000 in. There you go. You're going to get about 8.7% per annum return on that without factoring any of the wild cards.
That's a little less than the other property, though.
Absolutely. Yeah.
Now, Don, you own hundreds of houses, or
Yes.
100 plus. I don't want to get a call at midnight saying, the furnace is broken. Come and fix it. And I'm in Toronto, and they're in Surrey, BC. So what does an investor do to kind of manage tenants? If that's a big part of how you're going to get yield is rent, how do you manage that whole tenant piece?
The key piece about that is picking the tenant very, very well. And I will pay a company an extra little bonus for picking good tenants. I want to find somebody who's going to pick the good tenants. Because then what I can do from then on is just hire a service, like an a la carte service. Instead of a property manager, here's 12% every month, whether the people call you or not, it's an a la carte service. So if they get a phone call on the month that the furnace is broken, they'll deal with it, and they'll send me the bill.